Bringing out Osaic, Chief Market Strategist Phil Blancato. All right, Phil. Now here there are two. What can defeat the FinBops? What can defeat AI? All right, so there are two issues here, right? Getting out of Mag 7 stocks. It's been really, from time to time you can get out of them, but for the most part, riding this wave has been phenomenal. Getting out of them has been a mistake. At some point, maybe you get out of them, but where do you go right now? I mean, this is a powerful looking chart, even with the weakness of the last couple of days.
Last year, only one of the Mag 7 was in the top 10. There's a lot of places to go. And I understand that they have so much weight on the index. They represent about 50% of the return, that as they go, the market goes. So we have to accept that. And I will say, for all the talk about how AI hasn't helped the bottom line, well, of course it hasn't. We're a year into it. But look at American productivity the last 15 months. Part of that is AI. So let's have that debate.
You buy the AI story,
I do.
Okay.
Whether it's a French fryer in White Castle or where it's to come. How many people just use Zot or something like Jump just to record a conversation they don't have in person? So my point is, there are other places you can go here, and I think that narrative is a terrible narrative.
Let's talk about the other tug of war going on right now, and that's at the Federal Reserve, the state of the economy. So S&P Global comes out with their flash PMI numbers. On one side, you got the services, which did pretty good, but it was manufacturing. Manufacturing had a major surprise. In fact, I think it was the 53.3. That was a huge jump, one of the biggest jumps against consensus in a long time. Unfortunately, we also got this, right? The higher prices. And there's some signs, the price input, the tariff stuff. Where does this put the economy? Where does this put the Federal Reserve in your mind?
There's some headwinds happening right now, buddy. Weekly jobless claims spiked up. Continuing claims pushed over 1.97. Then you have what's happening, and this is a provocative story. Services prices are still up. Why? Because there's wages in there. Some of the goods are flat. What does that mean? People are still earning a relative good wage, but inflation is not coming down, and manufacturing and services both showed a little weakness. So you have a weaker unemployment market, a higher price market, and then you see services and manufacturing breaking down a little bit. We've got some headlines forming.
This manufacturing report was pretty good, though.
But you got to look at the body of work over the last couple of years. It's good here, this little price point, but remember, when you think about how problematic it's been for this to really push and make a difference, it hasn't happened. So prices are flat, right? And your output's a little higher, but this is sort of temporary. Remember, on ISM services from 40 to 60, it's below 50 still. We're still in contraction there. So I'm not buying that one print.
All right, I want to ask you about another piece of data out today. The existing home sales, I thought was the most compelling part about this is supply up almost 16% year over year. That's been a problem. Home buyers are in the best position in more than 5 years to find the right home and negotiate for a better price. Is this a positive for you?
It's a great thing. I think it gets even better if the Fed ever gets around to cutting interest rates. They should have cut 25, 50 basis points. But I'm going to be really provocative for you. In the short term, I think prices on big homes begin to come down because the supply is increasing. Especially if rates get cut, then you're going to see the market heat up because more people will come to the market. But here's the long-term story that no one's talking about, and we'll talk about this for years to come. The supply of used homes over the next 5 years is going to explode. Look at Arizona. A lot of folks are not living there, passing away there. So as the boomers move on, used homes come to the market, the housing story fixes
itself. By the way, boomers are 20% of the population, and they own 40% of the houses. So to your point, at some point, we're going to be oversupplied.
Exactly.
We got a minute to go. I want to talk about your stock picks. I feel like the Netflix, Walmart, of course, with their earnings out this morning, you've been big on the consumer, but these are like lower-end consumer-type plays in my mind. Although we know six-figure incomes are more and more going to shop at Walmart.
These are boring picks this week. I'll be the first to admit it. Why? I want you to take profit in the Mag 7. I want you to go boring for the month of September. I think the chairman's not going to give us what we want tomorrow. I think some of the data on unemployment and prices.
You think he could hurt the market tomorrow?
I think he can. I think he's going to come out a bit more hawkish than people expect. We're going into a very difficult month traditionally. Seasonality does matter. I think you buy names like this with some of the profits you take from Mag 7. Why? 700 million subscribers, an earnings beat in my opinion, and simply the best tech company that we all touch every single day, trading at a valuation that's fair. Put these in your portfolio, weather September, and let's see where we end up in October.
Good stuff, my man. Appreciate it. Always, as always.